Hi guys, welcome to Shakti Institute of Financial Markets. Hope you are doing well and staying at home. Today I am here with a new topic on strategy for small investors. Small investors are very much interested in buying shares and stocks, but they are confused with what capital they have to invest, how many stocks has to be bought in a portfolio, and at what price we have to buy, at what price we have to sell, what might be the exit strategy, what might be the buying strategy, how to select stocks. Many questions arises in the mind of a common small investor, right? So today I am going to discuss about a strategy which has been tried and tested by me from last 4-5 years, and I had started with a very small capital initially, and you can just see how I have been generating returns on the same capital every year on year. Right? So let's discuss about the strategy in detail in our video today. So let us start. Strategy for small investors. The strategy for small investors. This strategy I have been doing it from last 4 years. We started it on the April 1st, 2016 with the initial capital of 85,000 rupees. The strategy is very simple. It is investing 10% of capital in each of the company or the script which you are going to invest, right? So you need to list out some companies, maybe Nifty 100, Nifty 200 stocks. If you want to choose mid cap, you can choose mid cap. If you want to go for large caps, you can go for large caps. Whatever company or whatever scripts you want to select, you can select it. But you need to stick on with this principle that you are going to invest 10% of your initial capital in any of the company you choose, right? So approximately in my strategy which I have been doing, I have been investing 10,000 rupees approximately in each of the company, and sometimes if the markets are volatile, I have been investing half of this, that is 5,000 rupees also, right? So I have been selecting fundamentally some companies I have been listed out, and I have been taking buy call purely on technical charts, right? So there are some indicators and oscillators which I use to generate buy calls. We'll discuss this in a separate video. First, let us understand this strategy. Then exit is done once the investment value is giving you a return of 10%. So whichever company you buy, you are going to invest 10,000 in that company. On 10,000 rupees, whenever you see 10% return, you are going to exit it. You don't have selling target here. The target is 10% on your investment. That is 1,000 rupees. No stop loss will be using unless there is some very bad news or bad performance or bad news of the company which is going to come, right? And there is no fixed time horizon. Like, we are not here to do intraday on this. We are not going to invest in futures here. We are purely doing it in equity, and we are we are expecting good returns over a period of time, that is after 1 year, 2 year, 3. Most probably the horizon will be for 1 year, generating good returns at the end of 1 year, right? So no fixed horizon and no need to track markets all the time. So you do not have to keep on opening your mobile or keep on opening your system and tracking the markets. What happened now? Every 5 minutes, 10 minutes, you do not have to do that. Once or twice in a day is enough. Then this strategy will be giving you peace of mind. Right? No tension, no intraday tension, no intraday risk here. The end result is to generate returns more than any fixed instrument like bank, FDs, bonds, debentures, which are going to give you fixed instrument. More than that, even more than mutual funds which they are going to give you. This is just like managing our own portfolio, and the performance of the strategy I will show you. Let us go to money control, where I have been maintaining this portfolio. Transaction history, you can see here, this is my transaction history. Here you have to select the financial year. So financial year, first financial year 16 and 17. So if you press go here, you can just go. This transaction of 16-17, 1st April 2016 to 2017 has been opened. This is my account. This is my wife's account, which I have been maintaining. I have been doing this strategy in my wife's account. In my account, I am trying it out some other technique. So here, in the year 2016-17, these are the transactions which have been made, and you can see here, you take any company, approximately the quantity and the price, if you multiply by, this is the purchase price and this is the sell price, this is the purchase date and this is the sell date. These are the quantity which I have been purchasing. If you multiply it, it might be more than 5,000 rupees, but below 12,000-13,000 rupees approximate. So at least 10,000 rupees is the average which I have been investing, and this is the profit column which has been giving you profits. There are some small losses also, small profits also. It has been exiting. So you see here, a profit of 180 has been done, 600 profit, 400, 700 rupees, minus 272, 900 rupees, and in some have been lost, 800, 1800, 1400 profit also has been done, 1900 profit has been done. So small profits, small losses, altogether in this year 16-17 was a very good year. Here you can see profit of 1000 rupees, 10% here, 1000 rupees, minus 4000 was the loss which was happening in some cases. See, more of losses, profit transactions are there, and at the end of the year, this is the profit which I have made, right? So 16-17. Next, we can go for, that is 17-18. We'll just check it out. This I have entered in the Excel sheet. We can check it out later. I just wanted to show the actual transaction history to you, so that it should be a realistic one. And see here also, this is an abnormal profit of 4,000 rupees which was made on the same day, because it is because of the upper circuit which it had gone on the same day. Then 1600 profit, 780 loss, 3000 loss, some transactions 0, no profit, no loss. We try to analyze them, we try to track them. If they are not going to give us any returns, or if they are not going to move up or down, then we like to book it there itself. You can see here minus plus, and this is second year profit, that is 95,370. Then we can go to the third year, that is 18-19. 18-19 was the year where some sort of volatility started, like the markets were not so good, and transactions were also less, and I end up making a profit of 10,404 in that year, right? Then the last year, that was 19-20. You can see 19-20 we made a profit of 11,792, right? So let us go to the Excel sheet there. You can see here performance of the strategy. So I had started with a capital of 85,000. Then in the year 2016-17 I made a profit of 1,33,210, which is 156% profit on this capital. Then 17-18 95,370, 18-19 10,404, 19-20 it is 11,792. So total of 2,50,776 was my profit, and 294% return on the capital of 85,000. So if you see here, total profit earned in 4 years is 2,50,000. Total percentage of returns made in 4 years is 294. If you divide this by 4, average returns per year is 73.5%. This is reality and it has been done by me. I showed my account statement also to you. This can be done, right? So I started with the capital of 85,000. If you have 50,000, start with that. If you have 30,000, you start with that. But stick on to the principle, invest 10% of your capital in any company script or any company share you want to invest and exit it once you find 10% of it. This will definitely work and you are going to earn amazing returns as this 73.5%. This is awesome. You are not going to get this much return anywhere, right? So try doing this. Let us see if you want some more video on this. Hope you liked the strategy. Try using it and see wonderful results which are going to come. If you are interested in learning strategies like this, learning fundamental analysis and technical analysis skills, then you can just call me up or WhatsApp on the below mentioned numbers. I will be back with more interesting and informative videos like this. Thank you.